trading in U.S. shares was briefly suspended after sharp falls led to an automatic halt in the selling and buying of stocks. Once trading is resumed, the three major U.S. stock indexes went down over 6%. Meanwhile, South Africa's rand plunged by almost 8% against the dollar, Monday touching its weakest level on a closing basis since January 1980 as investors fled riskier assets, with tumbling oil prices adding to nervousness spurred by the spreading coronavirus. Despite these developments, consumers here in Ghana are still paying more for fuel at the pump. Joining me via Skype is Dr. Eric Esibe, and he's an economist. For more on this development, thanks so much, Doctor, for your time. So generally, if you can hear me, this doesn't look good for investors globally, but what's the possible way out? Because central banks are cutting rates. The IMF is also pledging to support weak economies, but is this the way to go? And what is the way, especially for the ordinary investor?
Well, I think it's a troubling time for investors because we all don't know what is going to happen tomorrow because once the coronavirus and then uncertainty becoming the new order, it's very difficult for investors to now predict which asset guarantees a positive yield that they should put their investment in because currently as share values and share prices are tumbling, and at the same time commodity prices also going down. It is difficult for investors to gauge really which asset provides safe haven for their investments. And so it's really quite a troubling time for investors as of now. But given the policy response, what Fed is doing, reducing the Fed rate, and then the IMF and others pledging support for the market, I think that confidence level might come up, particularly as the spread of coronavirus has slowed in China. That appears to be giving some bit of confidence to the market as of now.
All right, well said, Doctor. But you spoke about the IMF's pledging support for weak economies, but I was asking earlier about the ordinary investor who has already invested in oil on different or various stocks across the world. What should they be doing now? Some are already selling their stocks, but what's the best way out?
Well, I think they have to have a wait and see attitude. I think there's no point they panicking. Because I don't think it will fall continuously as it's doing. It's going to stop. I think there's some kind of panic movement in the market, and therefore the investors that are bothered will hold on to the prices now could gain in the future. Sell-off may not help. It will rather worsen the situation. And so I think investors should adopt a wait-and-see attitude and to see what happens in the market. Since one would say nowhere cool, commodity market is not doing that well, and then the stock prices are also not doing well. So I think it's better for investors to hold on to see what's going to happen. I'm sure there's going to be a reversal very soon.
Interesting. Let's bring it back home here in Ghana. And companies like Tallow are already struggling. And so with this new development of oil prices coming down, this is definitely going to deepen their woes, right?
Definitely. I mean, it's going to reduce their share value significantly, and it's going to really affect their bottom line going forward. But like I said, I think there's no point in panicking and for them to begin to withdraw. I think it behoves it's inured to their benefit if they stay calm and hold on to their investment as of now. Otherwise, because I'm very sure that the situation will normalize very soon. There's some kind of panic movement of capital across the globe, and once we begin to see some policy responses from central bank easing up rates, and then also with the slow spread, I do believe that we're going to see some stability, relative stability in the near future. Yeah.
All right, hopefully we see that. But one major issue of concern to a lot of people here in Ghana is prices of fuel at the pumps. I mean, when this whole coronavirus issue started, the OMCs responded and said, we don't have to run this with emotions, but this is not going to be something that will last. But we've seen prices coming down drastically today, selling around $36 a barrel. So, and a lot of people have said that it will go down further. Is it just fair that prices come down? For COPEC, for instance, they are asking for nothing less than 10% reduction at the pumps.
Well, I think to a large extent it's justified because if you look at the price build-up, there are two key variables that determine price, and this is the exchange rate and then the crude oil prices. And so over the last couple of weeks, we've seen that the currency has stabilized relatively. I mean, the performance is actually appreciated in value, and also given the plunging of oil prices, reducing from an average of $60 per barrel to around $33 per barrel. I think it's only normal that the automatic price adjustment is kicked in to begin to reflect in export prices so that the consumers will benefit. Because I mean, once prices are going down and the cedi has stabilized, I think that the pass-through effect should be passed on to consumers. Otherwise, it will not make any sense for the OMCs to come to us adjusting the prices upward when prices begin to increase or the currency begin to depreciate. Yeah, 5 to 10%, in my view, is a call in right direction.
I'm grateful for your time. Dr. Eric Osei-Sibe is an economist, and we'll be talking about a reduction in oil prices globally and the impact here in Ghana. That will be all for business for now with me, Sandra S. And I'm up and on back.